And we've got Brendan Malone from Raiz. Brendan, I can see the cover slide of your deck now. You can take it away, mate.
Perfect. Thank you, Mark. And thanks, Sam, for that presentation and all the viewers that have dialed in for this webinar today. What I will do is start with a quick intro to Raiz for any viewers that haven't heard of us before or know what we're all about or what is our why. And then I'll have a run through our 4C numbers and quarterly commentary that were released last Friday, the 26th of July. So I'm rather very excited about these quarterly results and the direction that the business is heading. Over the last 12 months, we're focused on two key goals, and that was transitioning the company to be operating cash flow positive, but also to divest our businesses up in Southeast Asia. And we've managed to achieve those, maybe not to the timeline and the expectations that we would all like, but we've done it in a managed way, and the business is moving forward. And I'm very proud of the team that have focused on both those goals, but also the continued growth that we've seen in the Australian business over the last 12 months. Customer numbers were up a modest 3.7% quarter on quarter, and FUM was up 23.4% over the year. I think that's a great effort in this environment. The team have done very well to maintain our customers, retain our customers, and also, as we'll see as we go through, sort of drive and improve the revenue, the relationships to increase the share of wallet that we have with our customers. So jumping straight into it. Raiz, what is Raiz? What are we about? We started Raiz just over 8 years ago in February 2016 with two core principles. Small amounts add up over time, and we fast found out that customers need a different way to save, and asking them to change their behaviour is very difficult. So we needed to find an automated way using technology to create this saving and investing opportunity for many Australians. So our vision is empowering all Australians with hands-on experience to break down the barriers to savings and investing. And whilst the app's both on Google and the Apple Store, you can download it, there is also a web app version of it. But what it does is it breaks down the barriers to allow customers to start investing for as little as $5. That's $5 into a diversified of over 9 portfolios. And you can see on the slide the different 9 portfolios we have, but it gives that diversification and customers the education and the understanding of what is this capital markets business that they've spoken about. We at Raiz are tired of hearing, oh, investing or savings not for me. It is. We break down the barriers for everybody. There's a few other product suites that we'll talk about going through the slides, but what we do is we provide that hands-on experience in the palm of the hand, financial literacy, financial inclusion, financial education for everybody. And as I mentioned, we started over 8 years ago, and as at the 25th of July, which was last Thursday, we had over 1.41 billion in funds under management and over 308,000 active customers. And we just pause for a sec. 1.41 billion. Core principle was small amounts add up over time, and that's what we've managed to achieve with the Australian customer base. With this slide and over 308,000 monthly active customers, I just thought I'd give a visual representation of how our customers are and where they are in their life cycle, because we want to create and maintain engagement with customers as they travel through their financial or their wealth journey. And how do we do that? It's by the product offering that we have, delivering great customer service and making it easy. Earlier this year, we released a couple of stats just to bring it all into perspective, that we've facilitated over $440 million of savings and investing for Gen X and the millennials in the calendar year to 2023. That's $441 million that they haven't saved before or had the opportunity to save before. Over the 8 years, it's been to the tune of over $2.4 billion. And in that period, we've reinvested dividends to the total of $130 million. So that's dividends and distributions that a lot of these customers have had access to for the very first time. And in this cost of living pressures that we have out there, we know that every little bit counts, no matter how small it is. So our strategy and direction includes building the pipeline from Raiz kids and attracting them early and then maintaining them and having a relationship as they go through their life cycle. And we do that through market-leading products, which is first-time users. We started this business for first-time users, but as the business has grown and the customers have grown with us, we increase and we broaden the product range, appealing to both wealth accumulators and people that want to continue. And we'll get into the products and the offerings that we have and the portfolios that we now provide to our customers, and the innovation over the time period shows that we are working with our customers, listening to our customers to increase the lifetime value of brand and loyalty and trust over this period. So we make it very easy to save and invest. 6 ways to get your money into your account or deposits in is automated recurring deposits. We have a lump sum functionality, roundups, Raiz, Acorns when we first launched, and today Raiz. We really pioneered the roundup concepts in Australia. And what that means is you link your debit card or your credit card. We see your transactional data coming through. You might buy a coffee for $4.50. We round that to $5 and we invest that 50 cents for you. So that's quite popular. And a great way for people to understand small amounts over time do add up. We have a Raiz Rewards capability, which is the cashback program to allow all Australians to save money on their daily purchases. And in this environment in particular, that's a very, very important engagement exercise. We have a referral program where you can introduce a friend and get a fee, just to help out a bit where we can. And then, as I said, we've invested over $130 million of dividends over the 8 years, or distributions, and that again assists with the compounding growth of your portfolio or savings over time. So making it easy to save and invest. Here's the 6 ways to save, and where do we invest them? There are 9 ways to invest. Portfolios number 1 to 5 is what we launched with 5 different portfolios made up of 7 ETFs, all quoted on the ASX. They haven't changed over time. They're doing quite well on a performance stat. And as we get into the quarterly numbers, I'll provide some performance details of those portfolios. When we first launched, our customer base said, well, we like to think about socially responsibly themed portfolios. So we created the Emerald portfolio, and it fast became our second biggest portfolio by customer numbers and dollar value. And then a few years later, they hit the crypto hype of Bitcoin, and our customers were saying, well, what about this crypto thing? How do we work with this? So we created the Sapphire portfolio with guardrails of up to 5% of your portfolio to have Bitcoin in it. So it provides an understanding, an easy way to have experience the crypto or Bitcoin with guardrails on, which has been quite successful, and it's a very popular portfolio now. A few years ago, we did our first acquisition of a business called Superestate, which was Australia's only residential property fund within superannuation. That came together about 3 years ago, and that portfolio is now both in the super and retail, and we have a residential property fund that we run and manage, and I'm proud to announce that on Monday the 29th, we settled our 12th residential property down in Melbourne. And then over the last 12 months, I said that we've taken the business, turned the cash flow of the business around and divested from Australia. But it's important to remember that we also innovated for our Australian customers. And on the 1st of August in 2023, we released this Plus portfolio. Now, what that does is allow customers to create and weight their own portfolio. So it's giving them a hands-on experience on, say, the top 99 ASX listed stocks, 49 ETFs. You can have an allocation of up to 5% of Bitcoin, or up to an allocation of 30% of the Australian residential property fund in there. Last week, on Thursday, Friday last week, we released that functionality in our superannuation product so that our super customers can do that. And that was a massive demand from our customers so they could build their own portfolios. Here's a screen that just shows, and I think the important part about here is putting all the product offerings that we have on one slide shows that these product offerings work together, from a Raiz Kids account on the right, getting into a Raiz Invest account, working through your Plus. As the individual experience and if financial education happens with the customer, we're on that journey with them. And we've got a Raiz Invest super product that has about $288 million of FUM in there. So superannuation guarantee, voluntary contributions can all come in, and we're with those customers on that journey. And we're working with the trustee now on a retirement incomes portfolio so that after the accumulation phase, we can move out that product into a pension phase. And that again will increase the lifetime value of the customers. And then the overarching product that does help across the engagement and retention is our Raiz Rewards program, where we have about 1,300 Raiz Rewards or merchants on the program, where if you buy through them, you'll get cash back into your Raiz account. So it's a pretty pretty strong engagement there. I think the overarching key ingredient across this is that we've developed our products from listening to our customer feedback. We have a great customer loyalty. We have great customers that provide their feedback from the littlest color changes to the actual product offerings, and we've got a track record of listening to them. Now, jumping into the Q4 results that were the 4C and business commentary that was released on the 26th of July last Friday. I'll run through these because they have been issued out. In the interest of time, I'd like to get to questions. But at a high level, the Australian operations have done very well with revenue growth of 28.1% year on year to 5.5 million for the quarter. There's been a steady growth. I would have liked growth to be a lot bigger over the 12 months, but a steady growth of active customers. But I think, as I've mentioned, the key retention exercise, the challenges we've faced throughout the year has been a testament to the support team working with our customers. There's been a massive engagement and this cross-sell and cross-promotion of our different products, which has assisted with the continued positive trend in the Australian annualised ARPU over the period up to $72.10. As I mentioned, the portfolios have done very well themselves, and Super Ratings announced that our moderately aggressive super portfolio was number 2 over the last 12 months in the Balanced Super Fund. We're also highly rated in the Growth Fund, and also our Emerald portfolio on our social responsible themed portfolio is again achieved a top rating through Super Ratings. Another milestone over the period was 4 consecutive quarters of positive operating cash flow. The cash balance in the Australian business has increased, and we're sitting on just over $9.7 million of cash as at 30 June. Also, we've got our full year results coming out, so there'll be a lot more information coming out over the next couple of weeks. But as I said, we've had positive momentum in the underlying businesses and all our underlying metrics, and the number of 306 that we see on the slide there was 30 June, 306,000 active. We're now at the 25th, or last Thursday, 25th of July, we're at 308. So we've implemented some changes over the last sort of month and a half, 2 months, and those are starting. That we've started the new FY25 year with great momentum. The momentum coming from last year shows that we have increased our average account balances from the 3,800 there on the right to over 4,500, but also to the cross-selling and the promotion of our Raiz Plus products, our Raiz Super products, and our Raiz Kids products have all had some strong growth over the period. Putting our customers first and at the heart of our innovation, it has been key, as I said, and we've continued to innovate since we've started through 2016 through to 2024. And even last week, when we increased our portfolio offerings, our investment offerings in our Plus portfolio, we have a voting page on our website that members or customers can say what they would like to see in their portfolios. And on one of the social media channels, I noted that we put in 7 of the investments that the customers were asking for out of the 10 that we increased in our ETF offerings. So strong engagement from our customers as we continue to listen to them and innovate the products for them. Some of the highlights that we've had, very excited in the last quarter in particular, that automatic rewards are now live. So when I mentioned that there's 1,300 merchants in our system, you would have to either click on through or have a card linked offer. Now, because we have your transactional data for roundups, we can instantly reward customers for the loyalty that they're having with merchants. During the period, we went live with 15 merchants in the last quarter, and there was 4,700 eligible rewards tracked in the first 25 days. Now, what's great from a customer experience is that it's a bit of a surprise and delight. You might have shopped at Flight Centre. We see that transaction and you're getting a reward. You would never have received a reward prior, but Flight Centre are happy to work with us and pay a loyalty reward into your account. And as a customer, you would say Flight Centre has invested in you. And as I've already mentioned, the innovation continued in the quarter with the Plus portfolios into the Super offerings, which was highly requested from our Super members, and we increased our retail Plus portfolios to now offer 150 investments. What is key on our whole business is our customer numbers, and I'm very pleased with the customer loyalties that we have. They are key, and we've done well to retain, but also moderately grow those customers over the period. So a lot of the questions we do get is, okay, well, how do we do that? Now, there's two key exercises. One of them is going to be to bring in new customers, but the other one is also to re-engage and retain the customers that we have. And over the last sort of month and a half, as I alluded to, we've done some great work through the AI capabilities, our digital marketing focus, and executing on what we said at our AGM last year, that we had a strategy, the strategy's right, and now we've done a lot of the back-end work to make that happen. And I think the momentum that we've seen of over 1,500 customers to the 25th of July, increase in active customers, has proven that we're doing the right things and we're growing. There's also, too, we've spent a lot of time over the last couple of months working on strategic partnerships. We've mentioned a few there. We have a strong partnership with one of our shareholders, Channel 7, with the AFL and AFLW and Abby Holmes and the Morning Show. That will continue in the second half of this calendar year, or the first half of FY25. And as the 4C alludes to, we have put a lot of our spend, or our contra spend, at the back half of the AFL season, where there'll be a lot more eyeballs actually on the TV as the competition comes to the pointy end. There's various other partnerships listed there, which I'm quite excited to get rolling in the next couple of weeks, to continue to grow. And the overarching, or the underlying opportunity in the marketing strategy too, is to look for more strategic opportunities, whether we can grow our customer bases through acquisitions or more meaningful partnerships. The overarching impact of Raiz over the years, and our data shows that we have provided financial education and opened up a lot of markets, a lot of opportunities for our customers. So it's key that education and financial literacy, by educating customers young, they will stay with us and they work with us, because we break down the financial jargon into bite-sized pieces of information that they can understand. We pulled a stat the other day that we send out a weekly newsletter on a Tuesday that gives a bit of a market update in small bite-sized informations and some financial definitions and some articles. And it's going out to customers with over a 40% open rate every Tuesday morning. The customer support team it's great to see that customers are closing their account due to they've reached their savings goal, or they need some money, but they say, look, I need to withdraw my money, but can I still receive the financial education on a weekly basis? And it's now starting to ingrain. We've seen a 53% increase in deposits on 12 months last year to 12 months this year, because customers are understanding the importance of saving and how that they can use the technology to automate those savings and not necessarily change their lifestyle. So to wrap it up, a few of the key highlights. I won't run through the 6 points that we have there. I think it's key over the next period is that we continue to focus on our cross-promotion as well as the customer acquisition. We have a great pipeline of new active customers through our Raiz Kids accounts, and we go right through the life cycle and the financial journey through to our super products. The exceptional customer support that we provide continues with the retention and also the cross-promotion of our other products, with over a 98% satisfaction score from our customers on our surveys. Innovation is key. Customer retention is key. Our technology, we do spend and reinvest on our technology to make sure it is best in class, and that includes the user experience, but also the back end on security. Looking forward, we are tracking on path to positive EBITDA, and I'm pretty excited for the next couple of weeks to get these results out. In the interest of time, there's the last slide on the market information. I'm very pleased with the supportive shareholders we have at the top holdings. They've been stable over the last 12 months and continue to support. And also, just quickly there, in our 4C announcement last week, we announced that we're on Investor Hub now, which will give everybody the opportunity to ask any questions. So if you haven't seen that, I ask that you look at that and the login details that are on the 4C. Mark, on that, I'll hand it back over to you.
Thanks, Brendan. Yeah, we've had questions coming in thick and fast there. So let me just grab the first one here. Now that the Indonesian, Malaysian businesses are, pretty much wrapped up at this point, there's a few legal processes, I know, to just completely exit those businesses. But a question on then, if we're looking at the Australian business, what's the operational leverage you'd expect to see, or shareholders, if you go from 1.4 billion in FUM to 1.5 billion, that every extra 100 million that kind of comes onto the platform, whether that's roundups, people doing the monthly, weekly investments, market movements, what does the operational leverage start to look like now?
I think it's important. Mark, I'll just touch on the fee structure for any viewers that don't know. If you open up a Raiz account and you get your account to an active account balance of $5 or more, we charge it's a subscription or a maintenance fee of $4.50 per month if you're in the first five. It goes up to $5.50 a month if you're in the other portfolios or the plus portfolios. Once that your account balance gets above 20,000, we move to a 27.5 basis points per annum paid monthly. So it's not so much about the fund that comes in, it's more the active customer numbers. So by putting on the active customer numbers, and even you could look at it by saying, well, what's the annualized revenue per user? New customers times that's what it's going to do and drop through. Whilst I expect the revenues to increase positively over the next 12 months, we do reinvest in the business. It has to be, we've got to continue innovating. We've got to keep our customer experience and our engagement there. But it is quite, we're at an operational cash flow level now, so things do drop through.
Okay. And then another question, and I don't know if it's going to be in the wider deck, a split between, growth in from assets coming onto the platform versus, just to move up in the market. We've kind of been hitting record highs on and off over the last couple of months. Have you got that disaggregated data at this stage?
Not at this stage. We can put that in and look to put that in the full year results in a couple of weeks. We are seeing some continued great record inflows. And the 6 months to date to June, we've seen customers depositing, has seen an increase of 19% over the last 6 months on average of what people are depositing. And I think that comes back down to the education that's saying we have continued inflows because people are using the automated features, whether it's daily, weekly, or monthly, and continue that savings process.
Okay, and then a question on the 4C. Revenue was 5.5 million, but the cash receipts was higher at 6.2. So obviously there's some kind of small timing difference. Was it something carried over from Q3? Maybe just touch on I guess why they don't line up that closely, if you can.
Yeah, that is a very good question. And the Appendix 4C at point number 1.1 is receipt from customers, and that's inclusive of GST, and that's at a group level. The receipts coming in. So if you take the 5.5 million Australian revenue, GST is 10% of that, and then there was about 200K of Malaysian revenue.
Okay, perfect. Yeah, that explains that. And then just I don't know if you have this stat, this is maybe one from me, but as the kind of product base has expanded between Super, Raiz Kids, the traditional portfolios or the plus portfolios, have you seen a gradual increase of that cross-sell working? Is there a number somewhere that people take 2.4 products on average, or 3.1 products? Like, is that cross-sell trending? Because as we know in financial services, oh my God, we've seen so many banks trying to get into insurance companies trying to get into banking, and then they dissolve the whole thing, and then the new CEO 10 years later comes in and tries to do it again. For whatever reason, cross-sell in financial services is a difficult nut to crack. It's not to say it can't be cracked, and there have been companies who have managed to do it. But are you seeing that trend as the business matures and the new product offerings come on, that your kind of existing cohort of customers who've been with you for a while and know how the whole Raiz ecosystem works, that they are flipping over their super, or having Raiz super on the side as well as the one that they've got from their work, and they're getting the kids account set up? Maybe just touch on that cross sell.
Yeah, definitely. Look, there's a couple of points there, Mark, that you raised, and I think one of the initial cross sell or cross promotion products is going from one of those 1 to 6, the conservative up to the aggressive or the emerald at $4.50 a month. We want to move them as they get experience, and we can see the life cycle or the persona of the customer. They come in, they get used to it, they put $10 in, they withdraw $10. Yes, it works. They put in 100. Then a couple of weeks later, they automate everything. Then they get some experience, and then they move up to the plus model. So we're pushing them up the value curve there. So that's a key target and a key messaging that we want to put out there to our customers. The second one is that cross-promotional, is it Raiz Invest, Raiz Super, Raiz Rewards, and even into our property fund, because we manage that. There's some management fees there that we collect. So it's putting the right product in front of the right customer at the right time. And that's what we've done. We've spent the last sort of 6 to 8 weeks on the AI capabilities in our system, because we have so much data. And that's the transactional data, the behavior data, the demographics of our customers, their banking data. We know what they're doing and where they're doing it. And we've rechanged our modeling system. So instead of sending a blanket 120,000 messages out, for example, we've got 10 different messages sending out to cohorts of 12,000 people. And the system now that we've implemented through AI is like, well, here's the A/B testing. How quickly can we change those messaging to get out? And that's what's really happened sort of late June, early July. And we can see that cross-sell and that re-engagement activity in the July momentum of our customer numbers has really worked.
Okay, perfect. And then there's a question here. I know you did touch on it in your presentation about the ratings that you've got from various industry ones. But question on how does the super performance and fees compare in the APRA yearly reviews? I don't know if you guys submit data to those APRA surveys, or if they pick you up in the APRA surveys.
We do, but that runs through our trustees. So they're working on those numbers now for 30 June. So our trustees EQT, and as they're the trustee of the super fund, we've got DDH Graham up in Brisbane, who's the administrators, and then we're the promoters. But the numbers that we mentioned that have been put out through super ratings are our superannuation portfolios. And at 12.1% for the moderately aggressive portfolio net of fees, it's pretty strong. And we put out a blog to our customers, because our customers do ask for it. What has been the annual return of our portfolio? So we'll get that out in the next couple of days.
Okay, perfect. And then maybe this is one for the full year numbers, but you said tracking toward positive EBITDA for the last two 4Cs. Can you be any more specific on timing is the question?
I would like to hold that for the full year results, because as I said at the start, I'm quite excited about getting these results out, because we wanted to split out in more detail and be a lot more transparent on the Australian business versus the divestment of the Asian businesses. So we will see that coming out in the next few weeks, and I think that'll answer a lot of questions. But we will have a webinar for our full year results, so I welcome the question then as well.
Okay. And then just another question for me on the Seven West deal. I think, correct me if I'm wrong, but it was a kind of a 7 million marketing spend, which is quite a, it's a large chunk of change to spend on marketing. It's still got a bit to go, as you say. It's going to probably wrap up in the next 6 to 9 months. What are the plans then for marketing? Because once that kind of drops off, are you going to look to re-engage with Seven on the program again? Maybe not to the same amount, or are you going to focus on digital now for a while? What's going to because there's going to be a big drop off in marketing, and you don't want people to suddenly think Raiz has kind of disappeared off the radar.
Absolutely. Good, great question. And it's a conversation that we're having not only at the management level, but also at the board level. Seven's been a great partner over the coming up to 3 years. And it was an $8 million contra and a $2 million cash for the 10 million equity placement just under 3 years ago. So the conversations will be there. What I'm very pleased with the strategy and the marketing strategy that we developed for the AGM or November last year, and now it's being executed, is that we've got the tools at our own disposal. And a lot of our customers, we're a leading example of a fintech company or financial services company acquiring customers online. And by having this AI language model capability that we're building in-house, is we can get to the right customer at the right time. So the Seven West does two things. It's out there, it's on TV, it's on the big screen. There's brand awareness, but also that brand re-engagement and customer acquisition. Now it's our job to follow up those leads. And if you look at our customer funnel at the moment, we've got about 1.5 million people, 1.5 million Australians have downloaded the app. About just over 700,000 have been KYC'd and had money with us at some stage, but we've got 308,000 active. So this whole change in marketing strategy and the re-engagement is to flip that around and get those inactive accounts back to active accounts. And that's a lot of those were earlier where the product was this big, now the product's this big, and we can service customers through the whole journey of their financial requirements.
And then one final question for me. I'm going to squeeze it in. I know we're just up on time. The automatic raise rewards sounds like, a great initiative both for customers, but also, for you because, those rewards balances come into the account in the platform. In terms of expanding that, across the full 1,300 merchants that are on there, I mean, how feasible is that? I know you mentioned Flight Centre, and I'm sure it's easier to do with the bigger guys as opposed to maybe some of the smaller ones. But I mean, these 15, I'm guessing, are kind of some kind of initial pilot to just to get everything up and running and working and stuff. But how feasible is it to roll that out? Because to me, that sounds like a very, very attractive thing where if I don't have to click a link and it's automatically coming in from day-to-day spending, it should drive, very decent inflows onto the platform.
Yeah. Look, it's going to be a harder burn, and it's all about the merchant being able to track. How do they know that I'm not just saying, here's a heap of transactions, pay us rewards? So it's getting the comfortable, getting the merchant comfortable. But with the 15 that we went live with in the pilot, it has improved, probably to sort of 80 to 90%. The loyalty from a customer point of view. So we'll get a few test cases drawn up, a few pages, and say, look, this is the loyalty that we're creating. You need to be part of it. And there'll be some goals to get some of the big enterprises, organizations on there, the Woolworths, the Audis, the Coles, get them, because what we like is that surprise and delight from a user experience point of view, because whatever cashback they get comes into their account and it says, they might say like Flight Centre has invested in you. So that's a conversation started to your friend at the barbecue, someone else or family, to get more customers on it. And automatic rewards is very big in the UK and the US, but no one's doing it down here. So we're very excited about that opportunity moving forward.
Okay, perfect. Brendan, we've gone slightly over and I don't want to take up any more of your time. So thank you very much for coming back and joining us. And yeah, the same as I said to Sam, hopefully we can get you back on here later in 2024.
Absolutely, Mark. Appreciate it. Thanks. And thanks for everyone for dialing in and listening. Any questions, please send them through.